Well, good afternoon. Time to check in on those markets live from the JSE. Starting off with the picture in the Asian region. Markets are lower, and this is again on renewed concerns about the global economic outlook. As a result, we saw the Hang Seng Index in Hong Kong down about 1.8%. Japanese markets also in negative territory, down 0.9%. We also saw a lower performance when we look at the Chinese markets, but that performance was lower, although a little bit more modest, as the country has announced shortening when it comes to the quarantine times for inbound travelers. Nonetheless, overall, investors are a little bit concerned that the Fed will not be able to manufacture a soft landing. We did get that high interest rate announcement, 75 basis points in the June meeting, the highest since 1994, with inflation sitting at a high of a 40-year high, that is. And now the debate is going into the July meeting. What will the conversation be around the table? Is it 50 basis points or will it be 75 basis points? Nonetheless, a little bit quiet when we look at our local markets. In particular sense, we had a couple announcements from Hyprop and Amira Property Fund. But to talk to us about the latest when it comes to market developments, we are joined by Patrice Rousseau, who's the Chief Investment Officer at Ashburton. Patrice, thank you so much for your time. We're looking at our markets with the financials lower about 2%. What's dragging the financials lower? And I suppose also the overall sentiment looking at our markets right now.
Yes, good afternoon, Nastasia, and to your viewers. Yes, our market's being dragged down by really concerns about the stage 6 load shedding and the impact it will have on the economy. As you would all realize, this series of very stringent load shedding impacts due to the strike at Eskom has been of real concern, and we're all waiting for bated breath for the unions to come to an agreement with management. There is an offer on the table of a 7% wage offer from management, but the unions wanted something in the double digits. So the sooner that this gets resolved, I think we can go back to growing the economy again and getting power back on the grid.
In yesterday's conversation with our market analyst, we looked back at the first half of the year and then obviously thrown into the second half. And in terms of his expectations, he's not quite optimistic. He's saying that if he had to assume a light at the end of the tunnel, that light could be an oncoming train. And I'm wondering what your expectations are for the second half of the year. Are you also a little bit pessimistic, or is it cautiously optimistic?
I think we're cautious. I'm not sure whether I would say, Nastasia, whether we're optimistic or pessimistic. I think a lot will revolve around actions from central bankers globally, especially the Fed. Inflation, as you mentioned in your introduction, has been a massive problem globally, and is starting to become a problem locally as we go through the target band. But more importantly, the risk is that if inflation remains more persistent, and central banks tighten excessively, this will drive the global economy into recession. There is a meeting, as you would know, from the ECB central bankers in Portugal ongoing from today. So we're waiting for some guidance as to how the central bankers view the inflationary problem and growth going forward. And hopefully, if we see inflation peaking early in the second half, that might give us some respite and reduce the incentive for central bankers, especially the Fed, to hike interest rates further, as we've seen more recently, as you mentioned, the 75 basis points hike in June. Maybe the hikes will be more moderate going forward.
Were there sectors that stood out for you in the first half of the year?
Yes, I think if we contrast the global equity markets to the JSE, global equity markets were down 18% in rand terms in the first half. We've had the JSE down only 6%, so on a relative basis, we're 12% better off. And financials, as you mentioned, surprisingly enough, being the best performing sector year to date, up 6%, whereas the industrial index was heavily weighed down 15% due to mainly Richmond, down almost by a third. So the JSE and emerging markets outperforming in this global slowdown is quite a surprise. It's quite a pleasant surprise for South African savers and investors.
So you had the Fed president for Cleveland saying that the July meeting, when the Fed meets, is going to be a debate between 50 basis point and 75 basis points. And I wanted to gauge, in terms from your perspective, which is worse for markets? Is it the high inflation, or is it the prospect of a recession?
Well, I think the two are intertwined, really. I mean, your question is very valid. The prospect of a recession is really linked to potentially central bankers hiking interest rates too aggressively, and that action is being driven by inflation remaining stubbornly high. So I would say if we see inflation peak and start to roll over, like it starts to lessen as we go into the second half, there's less likely to see these jumbo rate hikes, the 75 basis point. Maybe the Federal Reserve will go to 50 and even 25 basis point hikes. And I think this will mean a lesser chance of aggressive tightening and the US economic falling into a very sharp recession. We might go into a mild recession, and markets will see that positively.
Before I let you go, I mean, we were talking about, global inflation. And as you mentioned, inflation locally, we are starting to see it rear its head as well. And then I'm sure you noticed that comment out of Bloomberg, where Lesetja Kganyago, Reserve Bank governor, was interviewed, saying that, a 50 basis point rate hike is an option for July. From the in-house consensus at Ashburton, the impact of that, what does that look like for consumers?
Yes, I mean, it's quite a concept. It's a very good question. With the petrol price going over 25 rand a litre, we're seeing petrol, wheat prices, and with that bread are going through the roof. We think we're going to go well into the 7% for a short period, maybe 3 months. And I think, unfortunately, that might lead the South African Reserve Bank to hike, as the governor says, the 50 basis points. So we're expecting about 100 basis points hike into the end of the year and into next year. So there's still some way to go for our Reserve Bank, given the path of inflation being above their upper limit of 6%. And
Patrice, thank you so much for... Sorry to interrupt you, but we are running out of time. But we'll continue that conversation when we have you back on the show. However, that is Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments, giving us his perspective on the day's markets.